Hey everyone, welcome to the Be Bold, Make Waves podcast. If you're looking for strategy, systems, list building, and marketing tips to help grow and scale your business with ease, then you are in the right place. I'm your host, Laura Colmark, an email marketing and tech strategist who works with coaches and consultants who love their work, but not the tech. Join me for conversation packed with actionable insights, strategies, and systems to help you take control of your tech and simplify your business. Let's go ahead and dive into this week's episode. Hello and welcome to this week's show. For those of you who don't already know me, I'm Laura Colmark, evergreen email strategy, systems, and setup for coaches and consultants who love their work, but not their tech. I'm so incredibly excited about my guest today, Melanie Barker. Melanie Barker is a Christian who has a passion for helping others succeed financially, both personally and in business. The greatest joy is found in using one's strengths to help others become the best they can be. She has a BA degree in accounting from the University of Phoenix and is a certified QuickBooks Online Advanced ProAdvisor. She started her bookkeeping business, Promise Bookkeeping, 4 years ago to help small business owners not only take the bookkeeping burden off their shoulders, but to also help them understand how the numbers create the structure of their business. Bookkeeping is the part most business owners don't want to do, but it is the foundation of the business. She strives to help business owners understand how to view and read the numbers to create a good plan for future growth to continue building their dream. Melanie, thank you so much for coming on the show today. Can you tell our listeners a little bit about how you got into the bookkeeping side of helping businesses?
So I've always loved working with numbers. They just make sense. They're black and white. They're wrong, they're right. There's no gray area. And so I worked for the state of Utah for several years. I actually had 23 years in with the state, and COVID hit, my job function kind of changed. I was doing more traveling. I'm a single mom. I was homeschooling at the time, and I was having to travel more than I was previously. So I was leaving my son at home by himself, and it wasn't working out. And so I was trying to find a different position within the state so I could get to my retirement. And God spoke to me and said, that's not what you're going to be doing anymore. You need to quit. You're going to be doing bookkeeping. This is where I'm taking you. And so I did. I quit within 30 days. I didn't even have a client yet. And so I was just going on faith. I used the Dave Ramsey approach. So I had savings. I had money to carry me through for at least a year. And so I left on faith and started this business, and I love it. I love helping the individuals who are the business owners with their books and know how to read the numbers and why the numbers are important and how to not manipulate them, but move on to so that they know what they're doing with their business.
Yeah. So how did you start? So you just went on going on faith, you went and did this. How did you get your first client?
So my first client happened to be my neighbor across the street from me. She owns a grooming business, and she had never had a bookkeeper. She was like, I have no idea what I'm doing. She actually started her business because she has a disabled daughter, and she couldn't go out into the workforce to help provide for her family. So she started the grooming business. She goes, I never expected it to grow into what it is. It was just a way to bring in a little extra income. And it just kept growing and kept growing. And then she found that she needed help because she had no idea what she was doing with the books.
Yeah. I have a background in financials I worked for an agricultural lending company when I was in corporate, and like you, I love numbers. I love that it's black and white. I love that you balance out. I mean, we at the end of every day, we balanced out the numbers for all the branches, all the money that come in, all the payments, and it had to equal out to what it should. If we were off by one penny, we would all pool together and like print things out and start going through with our highlighters trying to find that one penny or 3 cents or the transposition of what was off. And if it feels good to balance your to balance everything, it makes that was always a very settling feeling for me. And it was, I know, for the rest of the department, we all were very number oriented. So it's interesting to me now as a business owner who also has lots of friends who are business owners. And that the thing I hear the most is exactly what you talked about when I read off your bio. It's the thing that I hear business owners outsource the most because they don't like doing their bookkeeping. They don't want to look at their numbers. It doesn't make sense to them. They don't know what they should do. They're scared to look at it. And that's not what we should be doing. Can you talk a little bit about that, please?
So I think in my experience is that they just don't understand what they are.
Yeah.
With clients I've worked with, it's like, no, I want this here. And it's like, but you can't put it there because that's not what that is. It's like a liability is not an expense, it's a liability. And that's on the balance sheet, not a profit and loss. And they don't understand it. They just, you know what, I pay this money out, so I expect it to be on my profit and loss as an expense, but it's not. And so it's just teaching them to understand how to read these numbers that are going into their business and how it affects the business, why they're important to know. Like I'm going to use construction as an example because I love working with construction. I know construction. So anyway, so you have a project, and if you buy the product and you just put it all as cost of goods and you don't divvy it up between each project, you have no idea if you've made any money on that project. And that's where a bookkeeper comes in to show you how to put that information into the books so that you can see where your profitability is. Are you doing, remodels and you're losing every time? Then you need to increase your prices, and unless they can see that on paper, they have no idea. They might be having an overall end income profit, but they don't know which types of projects are getting them that income.
Yeah. So for our listeners, there's one thing I want to touch on that I've heard a lot of people will do, and I'd like to hear your opinion on the first step they should take. A lot of times entrepreneurs start their business and like your neighbor, it wasn't supposed to be a big thing. It was just some extra money coming in. And so a lot of times I know that their money, the business money flows right into the personal account. So
Yeah.
if someone's listening in right now and they have one bank account set up that is their personal bank account and all their personal or their business, Stripe, PayPal, anything they're getting, their business stuff is going to that same account. Can you talk a little bit about if they should be doing that?
So that is a big issue. So I will say that most people to begin with actually do start out getting a separate business account. The only problem is then that business account ends up becoming more like their personal account because they don't separate. So you really need to keep your business and your personal stuff totally separate. If you need money from the business to pay your personal bills, transfer the money from your business account to your personal account and pay the expense. I would probably say a good 80%, 70% of people commingle. And it's the IRS frowns upon that. The local, state tax commissions frown upon that. And if you're audited, that's going to be a big red flag. So it is very important to keep them separate. And like I said, and if it is a personal expense that I used my business account, either let your bookkeeper know, or if you're doing your books yourself, you need to post that as an owner's draw so that that's showing that, yes, I use business funds, but it's personal. So So there is a way to get around it, but you don't want to keep doing it because, like I said, it is a red flag for the IRS and for the tax commissions.
And so as I'm a sole prop, I'm not an LLC, I'm not an S corp, I'm just a sole prop right now, just little old me. Uh, when I pay myself from my business account, how should I be expensing that on the business side when I transfer it over to my personal? Is that also going to be like an owner's draw? Is that a paycheck expense? How do you?
As a sole proprietor, you do not take a paycheck because your business is actually just an extension of yourself, of your own personal taxes. They're the same. But to show that's a personal draw, you would just do it as an owner's draw as a sole proprietor. It's not until you are in as a corporation that you would start giving yourself a paycheck.
Okay. So then another thing I want to talk on. I just love this so much. I've been so excited that you're coming on ever since I met you. So just a little background for our audience. I recently met Melanie at the event I talked about that I went to in April. I talked about it in my April income report that is published on the podcast. At the event in Las Vegas, Experts Connect with Renee Rebar. And when Melanie said, I'm a bookkeeper, I said, oh, you have to come on the show so I could talk numbers to you and just share you with my wonderful audience, and talk all things bookkeeping. So I'm so excited you're here. But I want to know, for someone who is listening and they are like, I am terrified of my numbers. I don't know what it's supposed to do. I don't know what it's supposed to mean. What would be like the first step that they need to do when they're looking at their numbers?
So it depends on how much experience they have and what knowledge they have. Um, Honestly, if they have no knowledge, then I would start Googling, start searching, start Intuit. QuickBooks has a lot of good information on how to do basic bookkeeping. And if you, because I know some small businesses, they're not where they can pay for a bookkeeper yet. And that's understandable. So, but there are a lot of good resources online that you can search and find out how to do the basic bookkeeping, where to put the numbers. Because there's different places for each type of expense. A liability, you've got assets, equity accounts, revenue, and everything feeds into those things differently. And so you really do need to have a background, a little bit of knowledge on that. And so I mean, really there's a lot of really good YouTube videos, people who've produced stuff. I don't know anybody off the top of my head, but yes. And so that would be what I would do first is really research it and see what is supposed to be where. And Intuit QuickBooks is a really good resource.
So you're a QuickBooks ProAdvisor. I personally use QuickBooks Online for my business, for my husband's business. I've been his bookkeeper for many years now. I love the stuff. I say sometimes if I could go back and start my business over, I should have been a bookkeeper because I just love it. I just admire everyone who goes and does that because I personally love it. I think it's a lot of fun. I look forward to when I go and balance the books each month. But I also know I am not the norm of business owners because so many people don't like to look at their numbers. But what do you say? How often should someone who is doing their own books, how often should they be going in and reconciling, which is just really matching up the transaction showing in your bookkeeping software and making sure it matches with your statements that are coming from the bank account, the credit card, all the places, and making sure everything matches up, so that all the transactions are accounted for. How often should someone be doing that in a perfect world? Again, I recognize we all need to be sending that weekly email. Not everyone does. It's okay. We're all just trying to do the best we can. So in a perfect world, how often should someone be going in and doing that?
So in a perfect world, monthly.
Okay.
So I primarily it's called after the fact bookkeeping.
Mm-hmm.
So I go in after the end so right now this month I'm working on April's books for my clients. So I go in, I categorize all the transactions to where that's come in through the bank and categorize those, do all the reconciliations, request information from the owner. Cause that's another thing is it is a partnership. As much as a business owner wants to just throw the bookkeeping away, it is still a partnership because we're not going to know where every expense that they have that it goes to. Like if they buy for something from Amazon, that's a huge array of areas that can be categorized to. So, so once a month would be like ideal to categorize, reconcile once a month.
Okay.
So be in there every day, every week. So, and depending on the size of your business, you can do all that. Like, I guess it depends. It really does depend. 1 day, 2 days, something like that. And if because you know what categories everything needs to go into, you can do it much faster than your bookkeeper can. Because the bookkeeper, again, has to ask the client where those go. So it could have to wait for the client to get back to us on that.
A lot of back and forth.
Yes, it is back and forth.
I know I'm lucky because my husband's my client. So I would just call him now or he's home. I'm like, what is this place? What is this for? What's this transaction? What was this?
Yeah. My neighbor across the street is like, can you please come over here really quick so we can look at a few things?
So I have a question kind of going back to your construction.
Okay. Knowledge.
Example. So I have a question going back to your construction example that you gave earlier. And so if I have an invoice for material that came through, and maybe I actually have 10 of them, and it's for multiple jobs, and the jobs, each order might have multiple jobs entwined in it because the material might be used for multiple jobs. How do you figure that out?
So in the accounting software, you can take that expense and you can split it out. And you would want, for me, I would have to ask the client, where do all these go to? And then you just split that out. And then I actually create a spreadsheet that I utilize. I have a client in construction. And so I do this. So I have a little cheat sheet spreadsheet for the tax to divvy it up between the individual items. So that I get it, exactly which one goes to which client.
Okay. I asked that just because my husband's business that I do bookkeeping for, that's one of the issues I have. I'm like, this is for too many people.
Yeah, you can just do a split and you just list them all on those and and then on the customer line, you would put, who the customer's for.
So in terms of, because that made me think too, oftentimes I don't get copies of things because it's all sent through email and I just know that my husband has it. So in the event of a audit, we will go back and dig through, which is probably not the smartest way to do that. Can we talk a little bit about receipt management and any tips or advice? What do we need to keep? I've heard friends say like, oh, I don't need to keep any receipt that's under X dollars. I know I've told my husband multiple times when you get that receipt when you go to get gas, you got to get me a receipt for backup. Can we talk about that a little bit?
Well, yes, you really do need receipts. I actually have a client who was just audited, and that was the issue that the auditor had, is that they did not have receipts for everything. And so, yes, it is very important to keep your receipts, and however you want to keep them. I know some software programs allow you to take an image of the receipt. I'm still not sure if that image of that receipt is acceptable or if you actually have to have the physical receipt. I've not delved into to research that and find out. Because I heard one person say that wasn't acceptable to the IRS as a receipt. So I don't know. I would think in our electronic age that would be acceptable. So I haven't really worried about it because I tell my clients they're the ones responsible for keeping the receipts. So, and then like I will use my neighbor as the example again. I she pays me to do a lot more than just a regular bookkeeping. So I do keep all the receipts. I do track all of that. And I will actually just bring my little binder. So I have just a 3-ring binder. And I just have the clear plastic sheets, and I just put all the receipts in there. They're not in any kind of order. They're just per year. And she has a different one binder for each year. So if she's ever audited, she can pull out her binder, all the receipts are there. And then she keeps paper records of all of her business transactions. So I have all of that in there, divided by month. And so really that's all you need is a 3-ring binder with all your stuff in it.
Yeah, it's a lot. It's a lot of paperwork.
It is a lot of paperwork. And that, to me, that I found you can also put it in a shoebox.
Yeah.
Because they'll stack nicely in a closet somewhere.
I get the big plastic filing boxes, the clear ones, and then I do hanging files, and then I do monthly. My husband has a lot of receipts that come through that are like from going into places and buying things and things that get mailed. The invoice gets mailed to us, not electronic. So there's a lot. We have a lot of paperwork that we're trying to go through.
So like I said, the receipts, QuickBooks Online is one of those that you can snap the receipt and it will keep it in the file.
Yeah, it's some days I think I'm going to do that. I'll have years where I'm like, I'm just going to scan everything. And then by February, I'm over it. I'm like, it's fine. I'll just put it in the files and it's fine.
Right.
So I want to know, when someone's looking at like the P&L, the profit and loss,
Mhm.
can we talk a little bit about, because it's can be overwhelming. There's a lot going on there. It has all your numbers that come in. It has all your numbers that go out. I know there's like, we just had a thing with the insurance and needing to get insurance renewals done. And my husband wanted to know, where's this number? And I'm like, I don't know if that's the number from before cost of goods sold or the number for after cost of goods sold. I don't know which number they want. Like, I'm like, you have to call the insurance company and ask them which they want because I don't know the difference.
And they probably wanted the after gross cost of goods, right? Because did they?
I don't know. I need to ask them, I guess, the follow-up question.
Because so the top of the profit and loss, you have your revenue. And then you have your cost of goods. Well, the cost of goods is what the actual expense was to make that product. Sorry, I talk with my hands. So your gross profit or your profit is after that cost of goods, because you couldn't have had your product unless you paid for the stuff to make the product. So your gross profit is after the cost of goods.
And I think they were asking for like sales. And I'm like, well, that would be the top number.
Okay, so the sales would be the top line.
I said, if they want.
So that's
I know.
something, that would be one that I would question, because you want gross sales or do you want gross profit?
Nope. And then what are all the numbers after that?
So then so the top part is your profits. And then after that comes all of your expenses. And you can set up your chart of account however is best for your business to view those numbers. So there are basic categories, your payroll categories, your, office supplies, administrative costs. But if you need some of those things broke out so that you can see in your business where those expenses are going to, then that's where the nitty-gritty comes in, is down in the expenses and where all those line items, where's my money going? That, to me, your income is good, is important. But the expenses and having those broke out and so you can see where they're going. Are you spending too much for rent? Are you spending too much for office supplies? And what are you including in your office supplies? Are you including software? Because nowadays we have all the monthly software fees. So do you think you should have a different line item for that? You spend a lot of money on that in your business. So that's I mean, each business is going to look different as far as the expenses. And then after the expenses comes any other type of expenses and income that, and this is all for the accountant part of that, is where does that come in on your tax form? Because it should be set up to where it would match the tax form. So like interest income is going to come at the very bottom, because that's a different line item in your tax form. It's not gross income because you didn't earn that. It was just residual income. So that's down at the bottom, and like home office expenses, that's a big one anymore. And they should be down at the bottom because they are treated totally different as your for expenses on your tax forms. So they should be down at the bottom. Vehicle usage, all of those expenses should be down at the bottom, separated out, because again, it depends on your business, how that vehicle expense is treated on your tax forms. And so it makes it a lot easier for your CPA to go in and do your taxes.
Yeah.
And then at the very bottom is what you earned at the end of the month. And we all hope that's a positive number.
Me too. I found, because I am one of those people that goes in multiple times during the month and tries to like update all my things. I like to know where my numbers are at. I have with my Stripe transactions for a long time, I let it just feed in, and I didn't do it. Now I do a journal entry so that I
Okay.
can see how much, because I wanted to know, like, I was like, actually, I did make more, but I paid more, but I had fees, and I was just putting in the final amount because that was what
Exactly. You have
fed
to do
through
a
it.
journal entry to add the fees back in as profit, and then it takes that out.
I was like, I did make more than what this is showing. And so then starting January a couple of years ago, I started doing the journal entries for it so that I wanted to know what my numbers really were, because I like to go in and compare. I compare my current month I'll do the current year to date, and I'll split it out monthly to kind of get an idea of like how much came in each month, how much has gone out each month, what are my numbers at? I'm always trying to find ways to get my expenses down. I spent a lot of time the last couple of years getting software that's one-time payment software, lifetime software, switching over to ThriveCart from MemberVault. MemberVault's a fantastic platform. I love them, but it's time to make the switch to a one-time payment and try to keep some of that software expenses down, because I mean, I have an online business. I work out of my home. Sometimes I'm surprised at how much my expenses can be just from all this stuff. There's a lot of shiny objects out there.
Right. And so that's exactly where you start looking and to cut costs. If you're really struggling, you're going to look at your expense section, and that expense section is only as good as what you've input.
Yeah.
So if you've just put it all as expense, I mean, I have a client who says, I want 4 categories and that's it. I don't care to have it broken out. That's not what I want. Okay. So that's what I do, but that's not going to show him a lot if he needs to see that in the future.
Yeah.
So I mean, the owner of the business really drives how that chart of account looks, and you can work with your bookkeeper with that and determine the best way to break those out so that you can see what your business is doing. Because unless you can see those numbers, you have no idea.
And that's so true. I mean, because I know for me sometimes, like it's been interesting. This year I was challenged by one of my coaches to do a monthly income report to really like review the numbers, review my goals for the month, my goals for the next month, like what I accomplished, my wins, all the fun things, lessons learned. And it's been really interesting. It feels very vulnerable to share that. I've gotten a lot of really great feedback from it though, because I mean, we're nosy. We are all such nosy people. We love seeing the inside of people's houses. We like seeing the back end of their business. I want to know people's numbers. When someone talks about, this $500,000 launch, I'm like, yeah, but what was their ad spend? Like, no one talks about what the profit was after the expenses. Everyone always talks about, and that was something that I always struggled with. And again, I think it's going back to like numbers and being black and white with things, where people would say like, what's your income goal? I'm like, well, are we talking my sales goal or my revenue goal?
Right.
Are we talking about what we want my profit? For me, it's always a profit goal. It's never been a sales goal. It's a profit goal.
Exactly. Because that's what we get to keep. Yes.
Yeah. So it's been really interesting to put that information out there, but I have gotten really good feedback that people enjoy hearing the back end of it. And it's again, when I go back and look at my numbers, I try to remember like look at my stuff and look how far I've come. I went back and looked and compared from the beginning of when I started using QuickBooks, which was in 2018, and I ran a report for like everything from then to right now. And that was fun to see how much all my sales and my profit. I'm like, okay, now I feel like I'm doing something a little more exciting because sometimes, we're in this roller coaster business model of the income fluctuates so often, at least I know for me, it sure does. I don't have a lot of reoccurring monthly retainer clients anymore. I do a WordPress protection plan where people who need WordPress maintenance and the backend stuff updated, and they're on a monthly reoccurring charge for me to do that. But other than that, I do VIP days. And so sometimes I have projects, sometimes I don't. And sometimes I'm gone traveling to events in Las Vegas, or my kids are on spring break, or summer's right around the corner. And I don't have as much work time. And I definitely see that reflected in my numbers. But I know that because I look at my numbers.
Right. And that's the important thing is to look at your numbers and see what's happening. So
Is there anything that you find that maybe has been like an aha moment for a client that you've worked with where maybe they were struggling with some of their numbers or looking at their numbers, and has anyone had kind of like oh, this kind of makes sense now?
I will say my first client, she still doesn't like numbers. She just is not, it's just not who she is. And but she's understanding it more now. And she's like, she gets why you need to do it. And it's helped her in her business immensely. Because when I first, got her, I'm like, you're not making money because you're not charging enough. And she's like, but I don't want to charge my clients more. And I'm like, but what is everybody else in our area charging for your service? You're way undercharging. And I understand you don't need to be up to where they're at, but you do need to charge more, or you're not going to, because she was at that time getting to where she really needed to hire somebody to help do the grooming. And she's like, but I can't afford it. I'm like, that's because you're not charging enough. You charge more than you can get somebody to help. And so it's been a process. I mean, she's been my client for 4 years. And she went from like, I want to say, basically she's more than doubled her end profits. And she now has 3 additional groomers. She's in her own building. She's not out of the garage of her house. So you know what? I have really enjoyed watching her grow. And it was all because we looked at the numbers. Before that, she didn't know what she was doing. It was just whatever. At the end of the year, I'll just throw all the receipts together and give them to the accountant and see what happens. And so now that she sees this, she's more mindful of where she's spending her money and everything like that,
So with clients like that, what sort of thing are you getting together monthly and going over certain reports? What, if so, what reports are those? Can we kind of dive a little into that?
So I produce a monthly financial report, which includes a profit and loss, a balance sheet, and I don't really do a cash flow statement unless they ask for that. So the profit and loss is, income minus expenses, what's your gross revenue or your profit. The balance sheet, this is the one that really throws people off. They really struggle with the balance sheet. people understand money comes in, money goes out, here's my end line. So the balance sheet has your liability, your assets and your liabilities and your equity. So assets is your buildings, vehicles, any large purchases. The standard for the IRS is any fixed asset over $2,500. Now, most businesses, it depends on what they work at with their accountant, where that line, that threshold, if it's lower than that, it could be $500. But the IRS standard is 25, anything over $2,500 if it's a fixed asset, not like a supply for cost of goods, but an actual asset like a table, desk, furniture, stuff like that. So that would go on the assets. That's going to tell you, well, it's like your house. Everybody can understand your home. That's your home. That's your personal asset is your home. And how much is it really worth? So here's the value of that asset. But then you have the liability, which is the bank account, the mortgage. So you have a mortgage on your home. So really your asset's only, say it's valued at 400,000, but you owe 200,000. You only have 200,000 as an asset. And so so you have your assets there. And a lot of people when they're first starting out in business, they don't understand that those assets have to go on the balance sheet. And then you have liabilities, which are loans. What do you owe people? And so that's got to go there. So if you make a payment to a loan, it's not an expense for the business. It goes towards the liability that you took out that loan to pay down that liability of the business. Because basically, in essence, you bought something which became an asset. This is really getting complicated here.
It is.
It is complicated.
It is. There's pieces that can be so simple, but when you get into some of the nitty gritty, it gets complicated.
And that's where a bookkeeper comes in, is to understand all that. So then you've got your liabilities, and then the last part of your balance sheet account is your equities account, which is where, like, if you're taking a draw out for yourself, it goes to the equity. So it's how much did you invest in your business? How much have you got taken personally out of your business? That's what the equities account is. So, and then, another thing with liability, like construction. So a construction company, say they take a draw to begin with, they want 50% upfront.
Mm-hmm.
So they go buy materials. Well, that has to be held in a liability account because it's really not their money until it's spent. So if they get $10,000, they go buy $8,000 in material, it would come out of that liability account to pay for those materials because it's being held in this liability account because it's not your money until you spend it. And the same with like the labor part of it. So if you invoice your client in construction, 20% of the cost of the whole project, then you would pull that out of whatever you took up front, and then the additional amount you would invoice to collect more money from the client on the job. So it can get really complicated.
I know. I see that with my husband's business. He has a custom boat enclosure canvas. He sews and makes custom things, and his bookkeeping's hard for me. There's a lot going on when I do mine. It feels so much easier because I don't have a lot of those layers to my projects that I'm doing.
Service industry, like marketing, sales coaches, any kind of coaching like that, it's way easier accounting.
Yeah.
And like retail gets more complicated. And that's the other thing, retail, cash. If you're dealing in cash, you need to track that. And it needs to be deposited. If you collect cash, then your point of sale system should be recording, this is how much cash was collected. Then you should see that being deposited into your bank account. And if not, then where did it go?
Yeah.
And that's a hard, I mean, because people like to just take their cash.
Yeah.
From their business. It's my money, it's my cash. Well, no, it's really your business's cash. So yeah.
Oh my goodness. So good. Melanie, I would like you to tell our listeners what is your favorite way to work with people? What kinds of businesses do you like to work with? So they can find out more about you and how you're helping everyone get their bookkeeping in alignment.
So I've not really found a favorite business. I've worked with several businesses, and well, obviously, coaching, marketing, service type industries, they're obviously my favorite. But I love construction, and that's because I have a background knowledge of construction. And so it's easy for me to work with the client to help them through that process, because it is more complicated accounting. And whatever. Just really I like it, all businesses. Because they are all the same. I mean, it's all profit and income, it's just a matter of how you're doing the work.
Do people need to specifically be already using QuickBooks? Do you only work in QuickBooks? Do you work in some of the other accounting bookkeeping systems?
So QuickBooks Online is pretty much all I work with. I have ventured out and just recently did a job in another software, and yeah, you know what? You always complain about what you have until you work with something else, and then you're like, oh, now this is so much better. Yeah. So I don't know. I usually try to get my clients to switch over to Intuit, because for one thing, it's going to be faster for them, for me, cheaper, because I can do it faster because I know it so well.
I love that. I could sit and talk to you about this all day long. This time just has flown by. I do have one final question that I ask everyone who comes on the show, and that is, what is one piece of advice you would give to someone who, when they are growing and scaling their business, that would help them be bolder, be louder, and make waves?
To definitely look at the numbers. And that's really being bolder, because owners don't like looking at the numbers. So doing that, and by doing that, you're going to grow your business and make waves in your industry, because you'll know what you're doing.
I love that so much. And it's so true. Melanie, thank you so much for coming on the show today. Can you tell our listeners where they can come find you, hang out with you, find out more about your services, maybe reach out to you and be like, help me, please. I need you in my life.
So I don't have a lot of an online presence. I do have a Facebook page. I'm not very diligent at doing anything in that. So you can reach me through my email, which is Melanie, CMELANIEC @promisebookkeeping.com. Or you can reach me by phone, 435-893-5812.
Wonderful. And I will link both those in the show notes. Thank you so much for coming on today. This was such a great conversation.
Thank you for having me. I love being on the show.
Thanks so much for listening to this week's episode. Be sure to check out the show notes at lauracomark.com/podcast. And if you're ready to get more sales without more work, save time so you can focus on the work that you do love, and automate and simplify the back end of your business, grab my free resource, How to Get More Sales from Your Email List on Autopilot. Head on over to lauracomark.com/email. And don't forget to follow the show and leave a review in your favorite podcast app. It helps get this show in front of other business owners who want to grow and scale with ease. Thanks again for listening. I'll see you in the next episode. Bye now.